I'm about to drop the hammer and dispense some indiscriminate justice.
Welcome back to Strong Man Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3. And hater of narrowly focused ETFs and dividends. Now, I had to make a quick video. I had to make a really quick video because I was watching Everything Money, the channel on YouTube that is all about value investing and picking individual stocks, even though it's tax inefficient. I still like them though. They made a video about 3 dividend ETFs to consider, okay? I'm going to list off these ETFs, and then I'm going to give you my stance on dividend ETFs. They're trash, and I'm going to show you why. So in their video, they talked about VYM, that's a Vanguard High Dividend Yield ETF. It's basically all U.S. stocks. Schwab U.S. Dividend ETF. Schd, SCHD, that's another U.S. stock dividend ETF. And the Spider S&P Dividend ETF, SPD. And they compared that to ARK's Innovations ETF, which is also trash. Now, here's my stance on dividends. I'm going to show you a little example here, okay? Dividends are not free money. They are tax inefficient, and they literally do nothing for you except pay taxes. When you see a dividend come in, and it, hopefully it's in your tax advantage account, then it doesn't really matter. But if you have a dividend come in your Robinhood account or your any kind of taxable brokerage account, you should be pissed because that means you're paying taxes for no reason. When a company declares a dividend, they have this thing that's called the ex-dividend date. After the ex-dividend date, the share price of the stock drops down by the amount of the dividend. That basically means that anybody that buys the stock after that date isn't going to get the freaking dividend, okay? Here's a perfect example. This is Tesla Maesla stock. I just made it up, but some of you might get the reference. Now, this stock is trading for $50. $50 per share. And they're going to pay a $1 dividend. Now, before the $1 dividend, the stock is trading at $50. But after the ex-dividend date, the $1 dividend, the stock price goes down to $49, and then they pay out the dollar. So at the end of the day, you're going to still have $50, except with the dividend, one of those dollars is returned to you, and you're forced to pay taxes on it. Why is this the case? A dividend comes from the company. The company has cash, and they pay out the dividend to you. If a company is sending out money, that money is coming from the company's retained earnings, their accumulated profit. That dividend is basically leaving the company. So that part of the company's value, the cash, is leaving the company. Therefore, the company is not worth as much on a fundamental basis because they shot out a bunch of equity and they shot out a bunch of cash. Does that make sense? Dividends do nothing except make you pay taxes. Sure, dividends aren't the end of the world, especially if you're retired, but you don't just want to go after dividend stocks. The higher the dividend yield, the more freaking taxes you pay, assuming you have it in a taxable account. So all these clowns that talk about dividend stocks, it drives me freaking crazy because there's literally no reason to do it. Now, some of the ETFs that they talked about, and I'm going to show you why I don't like these ETFs either. They're too narrow, okay? They talked about Schd, what is it, Schwab? Yeah, the Schwab U.S. Dividend ETF, Schd, has 102 stocks, and VYM, Vanguard's ETF, has 413 stocks. So if you look at the top stocks, they're not too heavily concentrated in anything. Schd has Pfizer, Home Depot, Pepsi, BlackRock, and the VYM has JP Morgan, Johnson & Johnson, Home Depot. All big established companies that aren't growing as quickly, and they're paying dividends. Now, why would you exclude a massive part of the stock market simply to have slow-growing companies that pay a bunch of tax-inefficient dividends? If you're a boglehead investor, you own the entire market because you don't try to time the market. You don't try to go from value to growth and back and forth trying to beat the market because you're not going to do it, okay? Nobody beats the market except a very few people. Very few people. And it isn't you. Now, here's why I don't like them. Look at this. VTI, that's the total U.S. stock market ETF. Almost 4,000 stocks. And look, it has Apple, Microsoft, Amazon, Facebook, Tesla, Berkshire Hathaway, Nvidia, JP Morgan. Compare that to VYM, JP Morgan, and Johnson & Johnson. Why would you exclude Apple, Microsoft, Amazon, Facebook, Alphabet? Why would you not want those in your portfolio? And yes, I get it. Sometimes they're going to be overvalued. They're probably overvalued right now. But is that going to be the case in the long run? If you hadn't held Apple, Microsoft, Amazon, Facebook, Alphabet, Google, if you hadn't had those stocks over the last 10 years, you missed out on a lot of growth, okay? Don't narrow your investment to just one tiny sector of the market. Don't do large cap only, don't do value only, don't do growth only. Buy the whole market. I like the world market through VT, Total World Stock Market Index ETF. Buy the whole market, growth, value, large, middle, small, and let the world figure it out for you. And grow your wealth as the world becomes, or the world's companies, grow their earnings, they become more productive, yada, 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 yada. Okay? Stop with the dividend ETFs. I'm sick of it. If you have any dividend ETFs, I can't tell you what to do, but if you have VT, that's an all-in-one ETF. Maybe you can have some like bonds, or maybe if you really like to do factor investing, maybe you can have a little bit small cap value, whatever. But VT is basically an all-in-one ETF. So if you have like VT and VYM and this and that and this, why? Why? Just simplify your portfolio. Don't narrow your investment to one small slice of the market, okay? That's my rant for the night. Now, I like Everything Money because they say a lot of the same things I do. I swear they freaking copy my videos. I talked about how dividends were tax inefficient, and then what do I see? I see Paul talking about how dividends are tax inefficient. I think he's scamming me. I think he's stealing his ideas from me. No, he's probably not. He's a smart guy. Anyway, that's it. Buy VT or VTI or whatever you want to do, but don't just focus on dividend ETFs because dividends don't do crap. Look at this beautiful PowerPoint. Dividends don't do crap. They just make you pay taxes. $50 stock to $49 stock with a $1 dividend. That adds up to $50. Like, subscribe, tell your friends about me. I need to get 1,000 subscribers. I need $10 a month in ad revenue, okay? Otherwise, I'll starve and my baby will die. Have a wonderful night.